Manhattan's first quarter 2026 results are in, and it tells the story of a market that has hit its stride.
5 straight quarters of rising sales and inventory constriction.
And then on February 28th, the world changed.
Welcome back to the Real Talk NYC podcast. I'm here with my business partner of nearly 20 years, 2 decades. Oh, my goodness.
Good to
John
see you there,
Gustafsco.
Jonathan. Hi, Jonathan.
It's good to see you.
Good to see you.
It's been a while. We don't get so much time together anymore.
I know. I miss it.
So today we're going to dive into the Q1 statistics, and admittedly, we're a little behind on this time. We had some technical difficulties. We had some change of reporting and the process.
The way I like to say it is better late than never, right?
Better late than never.
Okay, so...
And we make a commitment going forward.
We certainly do. We're going to be on time, and we are going to hit it on the note. So with that, just as a reminder, we're talking about the Q1 results, which actually is a snapshot of the real estate market for the signed contracts from October till December of 2025.
Correct. Yeah, and then some of the stats sort of transcend because we have inventory and such, which is a snapshot in time, so that gives us a real indication, different indication of what's going on in our current market.
Okay, so let's dive right in. Let's talk about interest rates, mortgage rates.
Mortgage interest rates, we talk about the average 30-year fixed mortgage. At the end of last year, beginning of this quarter, we were bouncing right in the low 6s. And actually right before the Iran conflict, the Iran war broke out on February 28th, we just peaked under the 6% mark.
And then after February 28th, the rates progressively got higher. So they started at like 6.25. They ended the quarter more like 6.5.
Just under 6.5.
Yeah, about 6.5. Yep.
But because these Q1 closings were actually contracts from the prior quarter, it didn't really show up in the stats at all.
Right. Got it.
We'll feel it in Q2, I think.
Right. We will definitely feel it in Q2. So let's talk about closed sales.
So in terms of closings, we had 2635 on the books for Q1. So again, that's reporting mostly the signed contracts from Q4, and that's up just a little under 3% year over year. So in Q1, we saw a little over 2,600 closings. That is about 3% above what we did the previous year and about flat from Q4.
And what's really important in the report is that this is the 5th consecutive quarter of rising year-over-year sales. So that means that the market is really taking stride into something that we haven't seen in quite a while.
Yeah, and to put it in a little larger context, that 10-year average, we're actually about 4% above the 10-year average, but still not enough to be like, oh, everything's going crazy. And of course, the last month of the quarter is going to change a lot of things.
But in comparison to 2024, 2023, we've hit our stride based on the first quarter.
Yeah.
Okay.
Next, inventory. What do we got there?
So inventory ended the quarter with 6,164 active listings. That's down 16.7% from last quarter, which was at 7,399. So a big shift in inventory. What's that attributed to?
Well, yeah, and to frame that historically, again, going back to the 10-year average, we're actually about 6% below that long-term norm. So that's that constriction of inventory that we've seen. And to frame that historically, going back to the 10-year average, we're about 6% off of that 10-year average of listings, number of listings on the market as of the end of the quarter.
Right.
So
the inventory was the very first thing that was impacted by the war on February 28th. So we saw sellers pulling listings off the market and some sellers delaying putting their apartments on the market during March due to that uncertainty.
Yeah, we're just waiting to see what happens, because before we got into it, it was, it's going to be a quick and easy, thing. But we're now, realizing or knowing that it's going to be a little bit longer term hold here.
Sure. Okay, so let's move on. Months of supply and absorption rate.
Yeah. So the months of supply came in at 7 months. Now that, historically speaking, is low. Our 10-year average is 8.2 months. And we always talk about the absorption rate as being healthy between 7 and 9 months. So we're on the lower end of that, and running 15% faster than the historical norm.
Right. So that's real acceleration, meaning rising sales, falling inventory equals a tighter market. And
But
that's
again,
exactly
you
what the
can't
quarter
forget that this is business that was already in the hopper. So
Right.
it
So
does we're not feeling that. We won't feel that war response until next quarter.
So we're going to have the audience tune in for next quarter to see what's really going on in
and
this
it will
quarter.
be timely.
All right. That's right.
It really means that buyers were already operating in a supply-constrained environment that helps the pace move a little bit quicker as inventory goes down. What we'll talk about next is negotiability, which also, again, trends the same.
Okay, so let's dive into negotiability. The listing discount. How much buyers are negotiating off the last asking price? So that came in at 4.9% in the first quarter of 2026. That's down 5.1% the prior quarter and down from 6.6% a year ago. So what does that tell us?
Yeah, and we're off 5.4% from the 10-year historical average. So sellers were giving up a little bit less in the beginning of the year. We saw it in our own business.
Right.
We saw a lot of activity that even in January, February, we were going gangbusters and really seeing apartments trade that we had on the market for a while. Right. Seeing deals, be put together and then unfortunately falling apart, which is something that always happens in our market.
Mm-hmm.
And then in rate really in line in that March month, we saw a real pause button there.
So the tighter the inventory, basically, the less room for buyers to push back on price. So it gives the sellers a little bit more leverage.
Long story short, we were off to a really good start.
Absolutely. Let's move on.
Something happened.
Jonathan, what are your takeaways from the Q1 stats?
Well, I'd
like to hear, and I think that the audience would like to hear too.
Well, as I said earlier, we were off to a great start. I think, and that's true in a lot of different industries and a lot of different places. This Iran war is absolutely a big pause button in many different respects, and we talk about it all the time. The number one thing that people don't want to buy, and frankly, sellers don't want to sell in times of uncertainty.
Right.
And a war, regardless of how big it's being portrayed or small, it will affect the overall feeling especially in a market, an international market like New York City. That uncertainty is a global uncertainty.
Right.
And what we have that's in particular in this war is we have a real world effect.
Mm-hmm.
And that real world effect is the cost of certain things, including gas for your vehicles. Now, obviously, we don't all have cars here in New York City, but we see it in the
fuel,
import and such,
sure.
And surcharges on certain things, et cetera. Different parts of the country feel it in different ways. But that's a real world reaction to the war that kind of puts it in the buyer's mind and in the face of everybody that's looking to make a big purchase. And that's why we're feeling that real pullback, is because you can't ignore what's happening. And it doesn't really matter how much money you have. It's you go and you buy one bag of groceries and now it's $100 instead of $80. Like, you take notice of these things.
Of course. And so coupled with the effect of the war, then we had higher interest rates, which also can impede buyers jumping into the marketplace. And then one thing that I found very interesting in the report is that the $3 to $5 million range for the first quarter, the numbers were really high. So they surged 76%, the sales, which says it's the highest total number in 12 years. That's very high. But that happened in what I would say the pre-Iran conflict. So
well, that was before we even started talking.
Yeah.
These are contracts from the end of last year. This is before we we
that's
were really
correct. It was the
talking
end of
about
last
it.
year. That is correct. So again, I think it's going to be very, very important to put it in context for next quarter because we have definitely felt the headwinds since the Iran war.
Yeah.
And anyway, that's my take of it. I guess, do you have anything else further
Yeah,
to
and
add?
it can resolve. It's not like this is an unresolvable. What we typically see, and we talk about it a lot, is when you go through a period of pause or due to uncertainty, if that uncertainty even has the perception of starting to go away, say we come to terms with Iran and we have relief in the Strait of Hormuz where imports aren't getting affected and the oil prices come down, that can quickly turn our market. When we are in a slow season, then typically the following season or when that uncertainty lifts, we see activity start to pick up quickly.
Right.
And that's people jumping back in. So it's just pent-up demand. At the end of the day, we have a constriction of land here. We have a constriction of number of apartments versus the number of people that want to live here. But with that uncertainty in place, that keeps people from doing things at the end of the day. So I have high hopes that something comes to some resolution there and we see that turn. Doesn't mean prices are going to go up by 10%, but what that does mean to me right now is that, and I think we've seen it even in the most recent couple of weeks, we've seen a flurry of activity. Is that going to be a trend or is that going to be just a flash in the pan? We will see.
And I think, just in closing, that what we're seeing in our business is just that. We've seen resistance in terms of the buyers jumping in, and then a low amount of showings on some of the listings, and now just more recently more activity. And the homes that are priced really, really well to market. Sellers are, buyers are coming in even lower, but the sellers who really are anxious to get their homes sold, they are making the deals in these apartments, albeit they're not necessarily the easiest deals to consummate, but buyers need homes.
As we always talk about, the conversations that we're having with all of our sellers right now is what's your motivation to sell?
Correct.
Because you get to a place where it's like, okay, as you mentioned, the number of sheer showings going down significantly since the Iran war broke out. Obviously has a direct impact on whether we're going to sell an apartment. We have to get people through the space in order to have the ability to sell it. So we'll see what happens. It'll be interesting to see what the numbers, how the market really did absorb this, because we're always in a microcosm of our business. Albeit sizable, it's still only a very small fraction of the market overall. But we always talk to all the agents. We see it's going across the board. We're seeing it in listings that we're looking at for buyers. We're feeling it on our listings. It'll be interesting to see ultimately what the effect is.
Sure. And just to leave the audience with the fact that we've sold in countless different cycles, and Manhattan's here to stay. It's not going anywhere. So whether you're buying now or 6 months from now, or you've bought already, it's still, the center of the universe. Right. So anyway, but we're here to counsel. We're here as sounding boards. We're here to help you to navigate the real estate market. So
and
thanks
the
for tuning
market,
in. That's right. I'm going to see you next quarter.
Yeah,
I hope so.
Which isn't far away.
That's correct. So thanks for tuning in. Most importantly, be healthy, safe, and
remain in gratitude, and we'll see you soon.
See you next time.